The Australian mining engineer turned small-cap mining company specialist David Lenigas has done it again. After receiving criticism for taking on too many positions in the mining and oil and gas space, he relinquished many of his corporate responsibilities to concentrate on a smaller number of roles. Recently, he's turned his attention to the Australia-focused NEX-listed mining group NQ Minerals, where he's non-executive chairman. David joins us now here in the studio. It's good to talk to you. Thanks indeed for your time.
Yeah, no, pleasure, Jerry.
I know you're in town because of the mining conference here in London, but let's talk a little bit about NQ Minerals and what's going on. Why are you interested in this little company? I mean, it's got, what, 100% ownership of the Helier mine in Tasmania, which is a tailings business. What do you find so attractive in it?
It was a tailings business as the first of multiple phases of expansion. I mean, not since the days of, when I joined Emperor in the late 80s and 90s have I been working, in this sort of level with a company that's actually making money. And what I like about the Helier operations is they've forgotten about the equity and focused on the asset, and now it's up and going and producing profitably. Now it's time to sort of tell the world that NQ exists.
What are you going to be measuring yourself against when talking about how you're going to progress this company in terms of shareholder interest?
Well, look, the mine's been going now for 12 months. The first 6-9 months have been start-up, where you always have operating difficulties and commissioning. Yeah. And the last 3 months are going very well. And we're now doing record production, and we're still only running at 2/3 capacity. But we've now got a 10 to 12 year mine life making very good money. And I see the opportunity is a bit like the hub and spoke thing. Now that you have a basically $400 or $500 million asset, which is a big operating plant, there is tremendous potential within 20-30 kilometre radius to open up new areas for conventional mining, and that's what I see as the real opportunity.
You talk about the size of the mine that you know already. What sort of size do you think it could be in terms of your expectations, and what are you doing to push that ahead?
Well, look, there's a lot of drill holes that need follow-up. Aberfoyle and the subsequent owners have done some 200,000 metres of drilling. There are a lot of stranded holes with no follow-up, with phenomenal intercepts, which gives me encouragement that there's a very good chance of finding a number of nearby deposits. And I once said in London, the best place to find a big diamond's next to another big diamond, because I hate being lonely. But from my experience in the world, the best place to find another big deposit is next to one that's already big. And there's a lot of scope for geological expansion because there's been very little exploration done in this whole area for probably 20 years. And exploration techniques have changed a lot.
What do you think you're going to find there? Because presumably the people that put the holes down there checked it out and decided it wasn't worth...
No, there were some phenomenal intersections. I mean, right near the Helier mine, 400 or 500 metres into the wall, you're getting 25-metre intercepts of very high-grade lead, zinc, gold and silver that weren't followed up on because, Aberfoyle were pulling out of the project, and they were really running to end of mine. And in 2008 and 9, it reopened as an underground operation. They mined another 1.5 million tonnes. And at that stage, you had the world crash 2008 from a commodity perspective. So there's vast potential there. But to have a 10, 12-year mine life on reserves on a profitable basis is a phenomenal start. And then on top of that, we've also announced that we're moving ahead with the whole concept of developing a nickel cobalt play 100 kilometres away, and that's a 20-year type project. So over the course of the next 2-3 years, if the plan all comes together, this is a very diverse group. You're talking lead, zinc, gold, silver, nickel, copper, cobalt. And you can ride out a lot of commodity cycles with that.
So what do you answer to the question about, you say if it all comes together, what are the doubts about this?
Well, we've got to move the nickel cobalt project through to pre-feasibility study, which is due sometime around end of first half next year, and then we move through the banking process. But the great thing is Helier is now running profitably as an operation, in the tune of a good couple of $1 million a month, and that project's scheduled to get bigger over the next quarter. At the moment, the management's still optimising the plant. So it's very exciting.
On the balance sheet, I think you've got 65.6 million sterling of debt, I believe, at the last count at the half year.
Yeah, it's about 90 million,
What do you, in total, what do you want to do with that? I think there's some word about a restructuring and...
well, in the announcement where I was appointed chairman, we said we were working with our corporate banking groups to restructure the debt. Typically, start-up debt is a lot more expensive than debt in an operation that's well established.
Because of the additional risk.
Correct.
Yeah.
So, now that we've been in operation for 12, 13 months, the risk is now very much changed. So we're working with a number of banking groups to see if we can reschedule that $90 million into a much lower coupon rate. We have a very good chance of doing that. I can't say anything because we're bound under confidentiality on that. And I think once that whole debt's restructured, for a 4, 5, 6 year term, depending on how the economics sort of pay out from the calculus perspective, we'll be in a much better position. And then the structure's clean, and then I can say, okay, is NEX the suitable market for NQ Minerals? People criticise NEX, but if it wasn't for NEX, NQ Minerals wouldn't have bought Helia because the class tests don't apply. It's the only exchange in London you can actually buy something bigger than yourself. So NEX worked to that extent. Now, the issue is, what do we do with the corporate structure? First of all, we've got to go out and tell the world we exist. We're a very good employer in Tasmania. Get some value back into the equity because the management in the past have deliberately not touched the equity. All the focus has been at the bottom. And then, do we stay on NEX? Do we dual list? Do we move to a more senior exchange? But you can't do that until the debt's restructured. So the whole management focusing now is on restructuring the debt over the course of the next 2-3 months, and then look at sort of what corporate objectives we want.
That, of course, would give you a higher profile if you went on to, say, the AIM exchange or the ASX or wherever it is.
Look, I don't think the AIM. I don't think this is suitable for AIM. Whether I've got issues with AIM or they've got issues with me, historically, it's irrelevant. The fact that this is a mine with, a substantial debt book, but all mines have debt to start them. I think, and 3-4% of the world's fund managers can trade AIM. 100% of the world's fund managers can trade the LSE or the ASX or the TSE. And this is a project that isn't just Australian specific. There's other things coming down the chute on expansion plans, and we sell our product to the world. So I think this company has a global flavour. Before
we get on to the expansion plans and the pipeline expected under your tenure, do you have an interest in this? I can't see that you have on the list of interested parties.
No, when it was disclosed, I didn't have any shares or any options. I was asked if I wanted some options. And I think from this perspective now, one of my jobs is to help restructure the corporate entity, right? So not only help the guys with respect to rebalancing the debt, getting the story out there. You hear it so many times, Lenigas has got shares, or this guy's got shares and options, he's only talking his own book. And if we want to move this to a senior exchange, there's a lot of fund managers and the compliance people say, is the non-exec chair truly independent? So I don't want to own shares and I don't want to own options. I want to represent all shareholders equally, not just for my own book.
So how do you take part in this massive expansion you're hoping to see?
Well, they pay me well. They pay me well, and for that I'll deliver certain objectives that the company wants me to do.
So those retail investors that say, look, hang on a minute, we want you to take a cut, you would not ever consider it? Or do you think the opportunity may arise later on when you are on a major exchange?
Look, I said to the board of NQ, I said, look, I can help you over the next 3, 4, 5 months achieve getting your message out, helping you restructure the debt, starting to look at saying, okay, where do we really need to be listed? Either we dual list or move the exchange. And at that time, when I've delivered for you and you've delivered for me, we may sit down and look at something that's a little bit more long-term remunerative. But my job is quite focused for the next 3, 4 months.
Yeah. Talking about interest in companies, you do still have an interest in other businesses. As I said at the top, you've relinquished a lot of your NED positions and so forth. But you are, I think you were quoted as saying you got your, is it your Cambridge Play Stetson back on, or the Jurassic Stetson back on?
I follow it dearly.
What do you think
quite
about the
prospect?
Quite
often I wear my Stetson down German Street.
What is your interest in
just
the Weald
these
Basin?
Days.
And how do you see the development of the Weald Basin in the UK?
Look, I'm no longer on the board, but I'm a shareholder and I'm very interested, and I speak to some of the senior management on a regular basis for obvious reasons. I don't trade the shares because I probably know a little bit more than most people. But the first production horizontals gone in. I imagine over the course of the next week or two they'll bring that to flow. I'm hearing it should look pretty good, but you know, proof of the pudding's in the eating. The interesting thing about the development of the Wheel Basin is the time it has taken through the regulators and through the government departments to get this project from discovery hole to production holes to having the site permitted. That's a huge achievement, particularly considering it's 1.2 miles from Gatwick Airport.
Yeah.
So we're all watching with bated breath on what this first 2,500 foot horizontal will do. I mean, if you look at, you know, where they're flowing from the Portland, which was only sort of 70 to 80 feet thick vertically, this is 2,500 foot of pay.
Right. Mm.
And it flowed very well. Now, the question is it going to flow to surface by itself or do they need to pump it? But more importantly, these production holes give you recoverable reserve analysis. And then this project really stacks up.
And of course, as we said off camera, this is conventional, isn't it? This is
absolutely,
not
totally
fracking.
conventional.
But part of the problem, I guess, is the difficulties in getting acceptance for all this is persuading people that it is conventional and not fracking.
Look, the whole idea, people think that oil is fracking and this and pressurising. Look, this is so conventional, it's crazy. But, you know, people have agendas. You know, there are people who don't want hydrocarbon generation in the UK. And I understand why, and there are people who do. But without oil and gas, you know, the world's going to stop for the moment.
How different would the UK be in its oil production if fracking were allowed?
Well, look what's happened to the United States of America. Whether you like the United States of America as a country or not, you know, 5-6 years ago, it was oil deficient. It was an importer of oil, and it relied on a lot of imports from the Middle East. America is now a net exporter of oil and gas, and they have enough reserves that they don't need the rest of the world.
And you seriously think that fracking here could actually produce large and meaningful quantities of oil?
It could, but there has to be a lot of science done. I mean, at the moment, every time someone tries, you know, they hit roadblocks. It's court injunctions, it's protests. No one's actually done enough work to say, yes, it works, and here's the economic benefits, or not. Anytime someone tries, it's stopped. See, the other thing that the UK don't understand is most of the wells offshore in the North Sea are fracked.
Yeah.
You need to frack wells in that sort of environment to keep them alive longer. I mean, look what's happened to the North Sea oil production. You know, it wasn't that long ago, it was 1.6 million barrels, and then it dropped below 1 million barrels a day, you know, and then the whole Scottish referendum thing happened, and, you know, can Scotland pay for itself? And I read a report that to keep up sustainable development and production in the North Sea, keep it over, you know, 1 million barrels a day, I mean, you're talking hundreds of billions of dollars of new wells and reinvestment. So fracking is used to extend the well lives. Now, they don't do it onshore because of everyone's concern of earthquakes and, you know, are people going to get gas in their glass of water or whatever. But it hasn't hurt the Americans much. And okay, there's arguments that in some areas it does or doesn't. It's a very emotive thing. I try and stay out of it.
Yeah, no, okay.
I like conventional.
All right, let's quickly wrap up and get back to NQ Minerals, because I'm interested in where you go from here. We've taken a little bit of a sidestep away from what you're doing at the moment in Tasmania. You're talking a little bit about the pipeline of what you hope to see and so forth. What should we watch out for, as I said, in terms of how we monitor the progress that's been made and your movement across into being a company with some substantial...
The key issue is the message needs to get out that this mine's profitable. So there's a series of news releases that'll come out as the mine production increases. Mine production, mine profitability, as I said, at the moment it's really only running at 2/3 capacity. Then we start looking at gearing up into the 100% type capacity, which is a lot of P&L and a lot of top-line revenue. And then we start looking at the close environment for exploration. I can't wait to drill the first proper new exploration well that hits a discovery around Helia. I mean, that to me says this isn't a 10 to 12 year project. This is a project that's got 20 to 30 years written all over it. That's what excites me about this.
You're an Australian citizen. What do you make of what's going on here politically, both from Brexit and the election and the prospects for political leadership in this country?
Well, I'm an Australian and an EU citizen.
Right.
Because I'm a Lithuanian passport holder. So, but I don't vote in the UK. My wife and her family are UK citizens. Look, I've worked in a whole lot of countries ranging from total capitalist to total communist to socialist, to Stalinist, the whole lot. As a Commonwealth citizen, I think the whole concept of what the Labor Party are going on about right now is really frightening. I think the debt will never be paid off. This whole concept of young people don't understand the real concept of money and how hard it is to get. It's easy to crank up the printing presses from the government, but this is going to be a generational change in debt. No, and I'm surprised that there isn't a lot of rhetoric when Gordon Brown walked out of the office and he threw the keys at the Prime Minister and said, "Good luck, there's no money left in the till." I think it'll be even worse than that if this happens. So, I'm watching with interest. I'd like to see a Conservative win on the basis of the strength of the Commonwealth more than anything. I'm a Commonwealth citizen, and I think the Commonwealth's all powerful.
And of course, raising money in the London market, you want to be able to do that with freedom.
Yeah, and I think a lot of it's dried up. At the moment, it's very difficult to raise money in the London market. It's a bit like property prices.
But of course, how much more difficult that would be under Jeremy Corbyn. But do you see London regaining its position outside of the EU when and if it does happen under Brexit?
Well, if it happens under Brexit, it's because a Conservative Party gets in. I think this place will be like Singapore on steroids. You see, the largest trading bloc in the world is the EU. But the largest trading group is the British Commonwealth. And I think to bring Britain back to the concept of the Crown, the Commonwealth, common law, common accounting principles, across the board with such a large part of the world's population is something really exciting to look forward to. And I think the free trade agreements are going to come quicker from Commonwealth-related countries than all this rhetoric about let's go do a free trade deal with Europe. Of course Europe's important, and a free trade deal with America. All of those are going to have barbs on. I think the low-hanging fruit is what can be negotiated with the Commonwealth. And you try dealing in a jurisdiction where you've got notaries in Spanish or Portuguese or French, it's a nightmare. And that's why I think Britain could be a real powerhouse out the other side of a Brexit if Brexit happens. But if it doesn't happen, good luck.
Okay, David, look, I'll hopefully catch up with you again soon about NQ Minerals, but it's a pleasure to speak to you.
Yeah, no, pleasure.
Thank you very much indeed. That was David Lenigas. He's non-executive chairman of NQ Minerals.